Hello guys, this is Thor. Welcome to another video. In today's video, I'm going to explain the model itself one more time, but this is going to be in more detail way, I hope. So if you haven't watched my first video, which is Star Click Traders live stream with Thor 0928, in that video, I am going through the model with the Discord members, but this video is about like an hour or so, and there's much more to it. If you haven't seen it, there is a Q&A, and then I go over the rules I'm applying on a daily basis. But in today's video, I'm planning to stick to the model itself, and I'm gonna show a couple examples, bearish examples, bullish examples, and yeah, that's it. Let's dive in. So the model is it's nothing fancy, right? It is actually ICT 2022 model, that mentorship model, which is, I think it's the easiest model out there, and it's the most accurate one, and it's yielding me a lot of profits on a weekly basis, basically. And I can also trade the same model every day, but I like to take my time off of the charts, so that I can be more focused when I have to be more focused. When I know that there's going to be a low resistance liquidity run like this one right here, then I like to engage more. But anyways, so let's dive in. So in ICT's 2022 model, it is basically you wait for a raid, right? Breakout structure, fair value gap, and you short that, right? In this bearish example. So let's mark this as a raid. This can be a higher time frame raid, higher time frame PD array raid, or liquidity raid, anything. Buy side is gone, and then it breaks the structure to the downside, and within this leg, there is usually a fair value gap, something like that, a CB. You short that, put the stop loss above the swing high, you target the sell side wherever it is. It can be on this leg, it can be an alt low, it can be an imbalance, inefficiency, anything, right? So how I go through, or how I implement this model in my trading is basically on the 15 minute. So I use 15-minute as my intermediate term time frame, which I get the liquidity information for intraday trading. I also look at the daily and the weekly charts as well. That is for the direction, the bias, like the higher time frame or the long-term bias. Meaning, if I'm bullish on the daily or the weekly, or expecting a weekly expansion or something like that to the upside, I look at a sell side raise on the intermediate time frame, which is where I get my liquidity data, right? With suspicion, right? So whenever it raids the sell side, when I'm bullish on the weekly or the daily, I would like to fade that. If it's backed up with some sort of context, obviously, I don't just enter long after a raid or whatever. So visually, when when I'm day trading, when the market is live, this is what I see, right? This is Nasdaq futures, Nasdaq E meaning in Q. So this is what I see. This is what I'm looking at every day when I'm trading. On the right hand side, you're going to see the 15-minute chart. On the left hand side, you're going to see a 1-minute chart. I have two more monitors. On one of them, I have the same layout, but I pull up ES over there, and on the other one, I am actively watching 30-second chart as well. And the reason I'm looking at 30-second chart is because sometimes 1-minute chart does not give a fair value gap to enter. Like here, for example, I'm sure there's a fair value gap here on the 30-second chart, and that could have been a short entry, for example. That's why I like to keep an eye on the 30-second as well. But anyways, let's get back to the model. So for the model, Once you establish the daily and the weekly draw on liquidity or the interpretation of the weekly candle expansion either to the upside or to the downside, you go on the 15 minute. Why 15 minutes? So the reason I chose 15 minutes, this is a personal preference. You can do it on the hourly chart, 5 minute chart, or any other time frame. Time is fractal, guys. Remember that. So the reason I chose personally the 15-minute time frame is because I like to day trade basically. Like I like to hold my positions from 5 minute to 4 hour all the way to the close, right? That is why I chose 15 minute. I can do the same thing with 5 minute, but my targets will be quote unquote more conservative. So it's going to be more on the scalp side of things, right? So the intermediate time frame I chose, 15 minute, is where I get the liquidity. So one note here though, guys, if you're a day trader or a scalper, I do not suggest going over 1 hour time frame. So anything above 1 hour to get a liquidity data and targeting those highs or let's put it this way, targeting those liquidity pools, uh, they're gonna be more swing trades. And I'm not a swing trader, but you can do it. If you're a swing trader, get your data on a higher time frame, higher than 15 and above. So on the 15 minute, what I look at is the highs and the lows, right? So when market opens here, it's 9:30 candle is this one right there. I wait for, or I anticipate, if I'm bearish in this case, and I'm bearish on this one because we have, we rated the highs yesterday, the day before. This is Friday, this is Thursday. Rated the highs, expanded lower, right? This start bear sequence basically, right? So I'm bearish. There's equal lows. There are other targets here, which I'm not going to talk about in this video. This is just for the model. So at open, as a Judah swing, I anticipate the buy size to be rated. So I anticipate the price going above this liquidity pool to the upside into this fair value gap, the imbalance right there, right? And I'm looking at this price move with suspicion, right? I want to fade this and target these lows. And if this wasn't equal lows, I would still be targeting these lows because, like I said, this is my intermediate time frame, and this is where I choose which lows or which highs I am targeting, right? So every 15-minute low, this low, and there's this low over there. So you can target any one of them, or you can either completely collapse your trade at this low or this low or this low, or you can take partials going into here, first partial, second partial, main target, right? But how do I execute? So for execution, I use either 1 minute chart or the 30-second chart. And the reason for that is basically because I don't like wide stop losses, right? I love precision, and the 1 minute chart or the 30-second chart will give you the most precise entry with the tightest stop loss, right? And you get the targets from the intermediate time frame. So while looking at the 1 minute chart, and I know a lot of people are they're just watching the 1 minute chart as if it's, I don't know, like they're not aware of other time frames. They're like on the 1 minute time frame at all times, and obviously they get confused. They're like, oh, I have this low, these lows, then these lows, this low, swing lows all over the place, right? Which low am I going to target? And that is your answer. You are going to be targeting the intermediate time frame or intermediate time frames swing points, right? So this low, let's mark them all together. All right, sell side. I'm just gonna mark it all so you can refer back to it easier. Let me mark this as close. And then we also have this one right there. Let's put it this way. Okay. Sell side over there. So this is how I'm watching the market. 1 minute on the left side, 50 minutes on the right side, and I'm already aware of the daily and the weekly time frame because I'm just trading one instrument only, which is NASDAQ futures, right? So I'm not referring back to the daily and the weekly chart every single day. I don't do that because I already know where we're at. But if you're a new trader, I would suggest you going on to daily chart every day after market close. This will teach you better, in my opinion. So at open, we rated the buy side here, right? Then this is 9:30 candle, it rated. We broke the structure. There is a 30-second fair value gap over there. It broke lower. You don't have to execute on this one. You can stick to 1 minute. It's completely fine. And we came up back and came into this order block over there, and essentially this wicks mid-level traded into there. So this is a choppy open, by the way. I don't like it. Whenever you see this price action, you can just move away and call it a day. You don't have to execute every day to be a profitable trader. But if you're seasoned, you can trade this, obviously, which I did. But I'm not going to show this one specifically in this video. I'm planning to showcase that or teach that in the later videos because it's more on the advanced side, in my opinion. But anyways, so once it comes back down, back up here, you wait for a shift in structure. So high set, like structure shift. Once that happens, you enter on the first fair value gap and target these lows. That's the model. So we don't have a fair value gap here. There is a fair value gap on the 30-second chart, but since I'm not showing it on TradingView, I'm just going to skip it and assume there is no fair value gap there. No fair value gaps. None. There's one exists here, so this is the first fair value gap. Let's mark that. This is the first fair value gap. You go short over there. Here, let's just go short over there. Stop loss above swing high. This is 27 handle stop loss, which is a right stop loss in my personal opinion. That's why I sometimes use 30-second. I suggest you having an access at least on TradingView or any other platforms to a 30-second chart, because this is a fair value gap here. You can short that and you'll get a slighter stop loss, which is, I think, better. But anyways, in this case, you short the first fair value gap on the 1 minute chart. The target is the lows on the 15-minute. This can be the take partial area, take partial level. You can take partial there, put your stop loss at break even, and hold the rest to the main target. And in this case, you'll have a drawdown a little bit. It never stops you out though. And it hit the target later on, which was a 2-hour trade. Decent for me. I'll take that every day, all day long, baby. So yeah, this is the bearish example. Let me just delete everything so I can show more. Let's go down here for the bullish example, or here, let's go down here. So this chop, for the bullish example, let's take a look. So we have a raid here, then we expanded. There's a gap here. This is because it's a weekly opening gap, and it was due to the war-related news. I wasn't concerned about that as much at the time because it's completely manipulation, fear, whatever you call it. So at open is, I can mark it. Let's mark it. Equity open right there. So if I'm bullish, if I know that price is going to run the highs, and at open, equity open 9:30 in the morning, I wait for a sell side liquidity to run, right, on the intermediate time frame because again, I'm emphasizing this because it is very, very, very important. The intermediate time frame that you're going to be using is where you get the liquidity data. That is the only liquidity pool that you need to be concerned about. You shouldn't be concerned about the 1 minute lows and highs. Okay. So the sell side is let's mark that below these lows, below these lows. Then we have the buy side there. Let's mark that. Yeah, the buy side there. So at open, it sweeps this low, right? Once it does that, this is the Judas swing. Once it does that, I go into 1 minute. What day is it? Monday, October 9. Let's pull it here. 9 October 9. All right, here. Once it does that, you can long the very first fair value gap. Okay, I want you to understand that because the very first fair value gap is going to be the highest probability in this case. Okay, so this is the first fair value gap. So raid 930 comes back into the range, shifts the market right there or here. Let's put it there. Shifts the market here with this kind of close. Inverts the CB, left the BC. Okay, this level, this fair value gap is going to be your long entry. Okay, I don't. Okay, one thing I want to emphasize on this one: do not be fearful of entries. Okay, guys, because if you fear, or if you're scared to enter a trade, how else are you going to learn? This is why backtesting is so important. If you have some sort of any kind of fear of loss, fear of entry, fear of whatever, just go back to backtesting phase because as long as you don't build, like you gotta trust your model, okay? And you have to build that relationship with your model. You have to build that confidence in you and the model, and you're gonna get that data only from backtesting, guys. You gotta do that. I know it's not fun. I know you don't monetize anything during backtests, but trust me, over time, in the long run, it is going to help you a lot, guys. And it is going. Or if you're scared of entering any position or taking any fair value gaps or whatever it is, whatever your model is, that is what you should do. Go back to back testing, back test everything. Once you trust your model, once you know that it is a solid ass model, you will never fear anything, guys. Promise me on that. You will never fear anything. All right. So going forward, let me mark the buy side here. So we have right. Let's mark this one right there. We have a buy side there, which is yet to be taken on the 15-minute intermediate time frame. I'll make that black. All right. So before this fair value gap retest, it takes that buy side, so it's gone. I'm gonna delete that. Then we have this buy side. Okay. So that fair value gap here is the long. You put it on the swing low, and you target the highs, right? And in this case, the target is all the way up there because that's the only buy side on the intermediate time frame after the raid, sell side raid, right? In this case, it got stopped out over there. There is a reason for that to happen. It is it is not random at all. I'm going to show that as well in a later video though. I already mentioned this on Twitter, and if you guys do not follow me on Twitter, I highly recommend following me on Twitter. I'm going to put my link down in the description. The the folks that are following me on Twitter already know the reason for price to come down all the way down here and then runs. They all know that because I shared it over there. and I'm saving that for the next video probably. I'm going to teach you. But in this case, let's get back to the model. You get stopped out on this one, which is fine. Sometimes you get losses. Sometimes that's the best lesson you'll ever get, right? But this doesn't change anything at all because it trades down in here. Never engages with the liquidity pool, so it is still bullish. Never shifts the structure to the downside. So I look this as a accumulation longs. So I'm still bullish here. I'm waiting for a structure shift with a fair value. I'll delete this. So the first fair value gap here with a market structure shift. Come on. That's funny. Okay, sorry guys. First fair value gap, structure shift over there. It never tested there. So the second fair value gap, you wait for the second one. It's this one. It gets into there with this candle right there. You long that. So long it. Stop loss below the swing low, and then you target will be on the intermediate time frame. So the buy side is going to be the target. And also, one thing to mention here, we also printed a new swing high that can be used as a take profit. Partials, let's put new buy side on the intermediate time frame. Can be used as partial. We use as a partial. Yeah, let's put it that way. Can be used as a partial. I like to take partials, guys, because especially if you're new, taking partials will teach you a lot. First of all, it pays you. That's very important. That's your only job on trading. You gotta get paid, right? That's why you're here. Taking partials will pay you. And if you're a green trader, if you're a new trader, taking partials will also teach you how to manage a position. So after you take your partials, your only concern will be your stop loss. So the price, as price moves, you're gonna be managing your stop loss, right? It is gonna teach you that. And then on the psychological level of things, it is gonna teach you holding positions or holding your stop loss in price action like this one right there, deep retracements and stuff like that. So I recommend, especially if you're a new trader, taking partials on the buy, on the swing highs and the swing lows. So in this case, for the only reason I chose this high instead of this one or this one or this one or this one or this one, it's basically because I am looking at the intermediate time frame highs and lows, not the 1 minute. I do not care about the 1 minute highs and lows, okay? I want you to understand that. I don't care about this. And ICT does the same thing, by the way. We do not see his 8 monitors at his office, right? So when while we're watching his videos on the 1 minute, that's what all we see. We're like, oh, why did he choose that high? Why did he choose that low? Whatever. That's the reason, guys, because he's looking at different time frames at all times, and he's not concerned about these lows or highs, rather, in this case on this 1 minute. So because of that, this is the 15-minute high. That's why I'm choosing that, okay? That's the first partial entry, swing low. It takes you, it gives you, so you partial here, put your stop loss at break even, and then from there on, it's a risk-free trade. You hold it till the next buy side liquidity over there, which is here. So in this case, this trade was a almost 13-hour trade, and it lasted. So the duration of this trade was basically, let's take a look at this low, this candle to here, 2 hour and 20 minutes. So this kind of trade is what I love to take. I can take trades like this all day long, guys, all day long, and I love it. You know, that's why I choose 15 minute over the other time frames. as my intermediate term liquidity, intermediate term time frame. Okay, you can do the same thing on 5 minute, but you're going to be probably closing your trade around here, maybe there, not there, but here, maybe take partial here. And if you're new, you can totally do that. And if you are a scalp trader, that's fine. Um, Whatever works for you in terms of your character, because we all have different character flaws, you know. Um, and personally, this is what I love to trade over 5 minute scalps. Okay. So another thing to mention in this case, let me go over it because I just saw it. So again, if you are following me on Twitter, sometimes I put something like this. So for example, there's a SIBA here, right? Bearish fair value gap. So sometimes people get confused here and take partials because there's an imbalance there, which is untouched and stuff like that. This is not a concern for me. And like I said, if you're in here also, okay, never mind. And this is not a concern for me. And sometimes, if you're one of my Twitter followers, you already know this. You already saw this on my tweets. I wrote in these imbalances. I say I want to see speed here, right? Or what do I say? Like it has to disrespect this imbalance or whatever, right? So the reason I want to see speed here, and what I mean by speed, by the way, by speed, what I mean is once it trades into this imbalance, what I want to see is it rips through, like with one candle, two candles, or whatever, right? I don't want to see it lurking around, hanging around, or within this imbalance on the 1 minute chart, right? Because that means I might be wrong, or we might not necessarily wrong, but we might get a deeper retracement, or we might just like get into a seek and destroy profile or whatever. Okay, so I don't like to see it. So the reason I say I want to see speed in this case is because if you look at the intermediate time frame, so our long is here, we do not have on the 15-minute time frame. We don't have any highs, swing, no swing highs, no fair value gaps whatsoever. So because of that, I'm not concerned about 1 minute PD arrays at all. This is highly important. I really want you to understand this. I'll repeat this one more time, okay? So because on the intermediate time frame, because we do not have any highs or any lows until this one here, and no fair value gaps imbalances in this price action, I am not concerned about the 1 minute PD raise or 1 minute imbalances. In this case, this is an imbalance. So what it needs to do, what algorithm needs to do is once it trades into here on the 1 minute chart, okay, it might reject it. That's fine. I mean, this doesn't give me any kind of concern or whatsoever during a live trade. But in an ideal world, this is what I want to see. Okay, let's say this is price. We're approaching to this imbalance. Boom, with one candle, I want to see it violating this fair value gap on the 1 minute. A retest and boom, takes out the buy side. Okay, that's what I want to see. In this case, it didn't do that, which is still fine. But in an ideal world, this is why I mention on my personal charts, I want to see speed here, or I want to see price violating or disrespecting this imbalance, okay? And that is because I am looking at the 15-minute chart or the intermediate time frame chart, okay? So I want to show another example just really quickly. After that, I'm probably going to visually draw it on a blank page. But the most important thing is, guys, I really want you to backtest this, okay? I do not want you to subscribe to this idea or this model blindly, okay? Even, like, the reason I'm telling you this is because I was that person, okay? back in the days, I was like ICT shade, new PD array, or whatever it is, new something. I'm like, oh my God, this is it. Okay, this is what I fucking needed the whole time to become profitable, right? So what I was doing is like, once the market is open, I was jumping into a trade using the new thing, and I was hoping for insane results or profitability, whatever. That is completely not what you should do. And the reason is because you're not going to trust it, because you don't have the data to trust it. And that data is going to be your backtesting log, guys. Okay, I want you to understand that that's how you build confidence in yourself as a trader and in your model, whatever model you're utilizing. You don't even have to trade ICT or whatever. Okay, you might be trading something else, or like indicators or whatever, but if you don't have the data from backtestings, as you're not going to trust your model, you're going to be either prematurely close your trades, okay, and in the long run, it's going to hurt you because you're going to be having bigger losses than bigger wins, okay, and this is gonna just literally eat your capital, okay. That's why backtest everything. So whatever I'm teaching or I'm going to teach on this YouTube channel, guys, I do not want you to subscribe it right away. Okay? I want you to backtest it and maybe give me a feedback. My DMs are always open. You can send me a DM on Discord or on Twitter. Anywhere is fine. I'll be looking at your charts or questions if you have any. Okay? Do not hesitate to reach out to me. And I love seeing your feedback, guys. So please, 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 or questions. I will, or I am always like, I'm always trying to answer everyone's questions because I've been there, guys. I've struggled a lot before I came to this point, okay? I want you to understand that. So, anyways, guys, I'll show another example and I'm gonna call it a day here. Probably gonna make another video for later in the week about engineered liquidity, probably because that's important. Trying to find price action move here. Let's see. Okay, let's take a look at here. Let's not do that one because that's another thing which I'm going to talk about later on. Okay, here. So in this case, that's a good example. Nah, I don't like that one. I can look at bearish one, bullish one. It doesn't matter actually. I'm just trying to find. Okay, here's good. Cool. So in this case, guys, let's say this was a weekly, for the sake of this conversation, okay? Let's say this was a weekly point of interest, or let's say weekly objective, okay? Trading into that level was the weekly objective, got rejected, and rallied, okay? And this, with this candle right there, the market was closed, okay? This is Wednesday, September 27th, okay? So because the weekly objective was completed, let's say because of that, and we traded down into there, let's say we're going to get a retracement, okay, for the sake of this conversation. So I'm establishing my high time frame direction or bias as bullish, okay. Once I establish that, I will be looking at the sell side rates with suspicion, okay. That's very important because that sets the narrative intraday. So here, market closed, Asia, London over there, London there. And with this candle right there, this is the 930 candle, equity open. Look what it's doing. You're running the sell side one time, the second time, 930, okay? 930 candle Judah swing into the sell side, also into this favorite. Let's mark that. This imbalance. Okay, there's also a breaker, which I'm not going to be talking about in this video because it's not necessary. So, sell side, put it on the left, sell side. Okay, sell side is gone, but here I'm not interested because it's London, 5 a.m. Not interested. I'm sleeping anyway, so I'm not concerned about that one. But at open, equity open, since we run the sell side one more time into a fair value gap, which doesn't necessarily have to be into a fair value gap, just a side note there, okay? And we have this high here, okay, buy side. These are going to be my targets. I want the 15-minute guys just to mention it one more time. So we have here, these can be, all can be your partials, guys. This is actually taken, let's not take that one. Then we have this one right there, okay? Now, once it completes this candle, sell side is gone, okay? What I'm doing is, literally, this is what I do. What day is it today? Thursday, 28th September. Let's go back there. September 28th. Let's go there. Oh no. I can't look at it. Fuck. Okay, let's do this way then. Can I take a look at it on? Oops, no. Okay, let's do it this way. I'm gonna draw it as if this is 1 minute. Okay. So once this is the sell side. Annotated here. Sell side into a fair value gap, okay? So with this red candle at open, it trades into there, right? Draw the candle here. Or, you know what, let's not waste time with that. Trades down here, then expands, right? Do you see this candle here? Massive. So once it completes the raid, closes the candle on the 15-minute, opens the second one, and expands, right? In that expansion candle, this one, 945 candle, you're going to have a fair value gap, okay, on the 1 minute chart. Then it trades back there, here or here, these two. Come on. Come on, Tara, you can do it. And it keeps going higher and higher and higher, and it takes 15-minute buy sides, okay? So this is the model. This fair value gap on the 1 minute is my entry. I enter on the fair value gap. Either fair value gap high or whatever. Swing low on the 1 minute, wherever it is. Let's say it was here in this case. Okay, let's do this, whatever, I don't remember. And the targets will be, you can take one partial here, second partial here, completely close the position over there. Okay? And that's the model. You're long there, and look at it. Look how it's delivered. Once it trades down into this first fair value gap on the 1 minute, which is probably here, goes back a little more, and rallies. Look at those candles, energetic, right? It's trying to reach into these these highs. Okay? So, with that being said, I want to visually draw the model, guys, okay? This is ICT 2022. Nothing fancy. I haven't invented this model or whatever, and I'm not here to take any credits for the model itself whatsoever. This is just my interpretation from ICT's teachings. And I'm gonna, if you don't know who ICT is or what ICT is, I'm gonna drop his Twitter link in the description and his YouTube link in the description. Like I said, this is all his model, his teachings, based off of on his teachings, okay? So this is the bullish example for the model. I'll make it a little bigger, so I like bigger, okay? So, let's say 15-minute chart, 15-minute chart here on the left side, or let's do it on the right side, and 1 minute chart on the right side. Okay, let's divide them here. All right, so in the bullish example, in the bullish model, what you're gonna have is basically price expands higher first, okay, then starts pulling back, ranges like Asia range or whatever, then London comes down here, and stuff like that. This is, let's say, New York Open, then it expands here, okay? So in this case, the sell side liquidity rate, or sell side rate here, trading down here, you're going to be seeing that as a fake move or a manipulation because you're bullish, okay? Let's say your high time frame draw is bullish or whatever. And this is going to be the buy side, okay? So a model is basically, once it does this move on the 15-minute chart, you're going to be going down into the 1-minute chart, okay? And if I draw this price action here, okay, it's going to be looking like this. So that's a bad drawing. Sorry, guys, OCD kicked in. So it's going to be looking like this, okay? The sell side will be here, okay? It's not magic. I'm not inventing anything, guys, okay? I don't want you to be telling me that, oh, this model, we already know this model. Yeah, I know you already know this model, but there are a lot of people that are still confused, okay? That's why I'm showing this. And this model is what I'm using on a daily basis, okay? So, sell side is going to be here, down here on the 1 minute. You wait for the shift to the market with red, and you're going to be waiting for a fair value gap. This can be anywhere. This doesn't have to be on the first leg. It can be on the second leg or the third leg. Doesn't matter, okay? You're going to be executing on the very first fair value gap and targeting the buy side or swing highs on the 15-minute chart. Okay, every 15-minute high in the bullish scenario can be your partial area, partial level, or the main target. So this is the bullish example. On the bearish example, let's draw that one real quick. I'm trying to make this part fast because it might be boring for some of you. So on the bearish one, so we will be expanding Asia ranges, or anytime, doesn't matter, ranges, London rallies, and at New York Open, it comes back down here, okay? Let's do it this way, 1 second. London. This is equity open, rallies, higher, takes out all these highs. This highs doesn't have to be clean, by the way. Let's not make them clean, because in the real world, it's not going to be clean anyways, right? So it'll take all these highs here at New York Open, and that is going to be the Judah swing, and you're going to be looking at this when it trades, or let's put it this way, when price trades above the highs, when you're bearish, you're going to be looking with suspicion, okay? Once it does that, you mark the low, the last low, let's put this one a little lower, and this low, okay, these will be the sell sides. These will be your targets and partials. And on the 1 minute, what you're going to be looking at is, once it trades above the highs in this area, I'm taking it to the 1 minute chart, drawing that part of the leg, come above, okay? So in this case, buy side will be here, let's say, buy side, and once this happens, you will be waiting for structure shift. The reason you want to wait for the structure shift and the fair value gap is because on the 1 minute chart, it can print higher 3 times or 2 times. You really don't know how many times it's going to print on the 1 minute chart. So the safest thing to do would be waiting for the structure shift with this displacement, meaning an imbalance, a fair value gap here. And the very first fair value gap, or CB, will be your entry and you'll be targeting the lows on the 15-minute chart or intermediate time frame chart. Let's put it that way, because you might be choosing using the 5-minute chart instead of 15 or an hourly chart. I don't know how you want to do it. That's completely doable. You're going to be targeting those highs and lows though. Keep that in mind. And execution on the very first fair value gap on the 1-minute chart. So again, the very first fair value gap can be, it doesn't have to be on the first leg, okay? For the fair value gap can be here, the fair value gap can be here, wherever it is, you are going to execute on within that fair value gap, okay? Unless it takes out the sell side first. Okay, so let's say 15-minute, it didn't give any fair value gap here, no fair value gaps on the 1-minute, and it takes the sell side, okay, and no fair value gaps, and you can close the charts and call it a day. Okay, that's what I'm trying to say. So anyways, guys, this is it for today. I hope you enjoyed it. I hope you found this insightful. And again, I love to see or read your messages. Love to see feedbacks. Love to see your back testing results. Please, if you ever have any questions, either comment down below here on YouTube or DM. You can DM me on Discord or on Twitter, and I'm gonna drop links down in the description. Hope you guys find this insightful. I'm gonna be uploading this on Sunday, so you guys have a great Sunday. Peace. See you on the next one.